Hey there, forest dwellers. In this video, I'm diving into a topic that's essential for all homeowners. I recently had a client purchase a new home and she asked for help properly setting up home insurance. And I told her about the one big mistake that many homeowners make. And that's what we are covering in this video. Whether you're a new homeowner or you've been enjoying your home for years, having the right insurance coverage is crucial. When I do custom financial planning for clients, one of the things I'm always looking for is to identify risks that can derail a family's finances. What unexpected events could upend a retirement plan? So let's jump right in and explore the key points to consider when purchasing homeowners insurance. Point number one, determining coverage needs. First things first, when you buy a home, you have to determine your coverage needs. Take a close look at your home's value, the contents in it, and any additional structures on your property, like a freestanding garage, a pool, or even a boathouse. For your main structure on the property, you need to understand the current cost to replace the property. This isn't necessarily the purchase price of the property. In many cases, the value of the property you are buying also includes land, and the home may cost more or less depending on if you bought the property through foreclosure. Now, how do you determine your home's market value? Well, that's the price that you bought the home at, and it's determined by things like curb appeal, home condition, the architectural style, the size and number of rooms, the construction quality, and the supply and the demand of homes in your area. That's different from your home's replacement value. That value is determined by the square footage, the value of the floors, the fixtures, the appliances, the value of the exterior and interior aspects, the value of the roof, and the possible labor needed to rebuild. Now, understanding the replacement cost is the number one most important part of your policy. Most insurance companies adhere to a standard called the 80% rule. An insurer will only fully cover the cost of damage to a home if the homeowner has purchased coverage equal to at least 80% of the home's total replacement value. This rule is designed to prevent underinsurance and make sure homeowners can rebuild their homes after a loss without having financial hardship. If the coverage is less than the replacement cost, reimbursement will only be the proportionate amount of what you should have purchased. So it's extremely important to have at least 80% of the replacement cost coverage. Now, what about the value of the contents of the home? Typically, a policy will cover 50% of the value of the coverage in contents. Meaning, if you are covering a $500,000 replacement cost, then you get coverage for roughly $250,000 of the things within your home. So, if you have contents valued above that level, you'll want to make sure that you're covered. This does not include specific items like jewelry, watches, artwork, or antique furniture. And if you have specific valuable items like a Patek Philippe watch, or a diamond engagement ring, or a Rembrandt painting, or the Godfather's desk, you will want to purchase a special addendum or rider covering that specific item. All right, point two, understanding policy types. Now that you know what you need to protect, let's talk about different policy types. There are typically two main types of home insurance: actual cash value and replacement cost. Actual cash value covers your home's worth minus depreciation, while replacement cost covers the cost of rebuilding or replacing your home. Consider your budget and your long-term goals when choosing between these two options. While actual cash value policies may have lower premiums, replacement cost coverage provides greater financial security in case of loss. All right, now let's focus on deductibles and limits. Your deductible is the amount that you're responsible for paying before your insurance kicks in. Choosing a higher deductible can lower your premium significantly, but be sure it's an amount you can comfortably afford in case of a claim. The more savings that you have, the higher you can make your deductible. Lower deductibles are very important for those who have less in savings. That's the point of a deductible. You want to create a policy with your agent that works for your net worth, as that changes over time. Don't waste money paying for a low deductible when you have tens of thousands of dollars in savings. I bet you already know that insurance companies hate paying claims, and they really don't like customers who file claims. In fact, your rates often rise significantly if you file a claim. If you file a claim, and you file another claim, and you file another claim, the insurance companies really don't like that. Filing multiple claims is an easy way to be dropped for coverage. So make sure that having a claim is worth it. Home insurance is generally for catastrophic events, not small repairs. It also doesn't cover things like termite and insect damage, mold, and general wear and tear. This is for major accidents like fires or a tree falling on your home. Think about the amount of damage that you would accept before filing a claim, and potentially set your deductible to that level. That'll create a policy that works for you. Let's talk about what, in my opinion, is the #1 mistake that many homeowners make. But before we do, this is a perfect spot to point out important disclosures. You know I need to do that. The information in this video is for educational purposes. This is not specific financial planning, health insurance, or investment advice. In addition, everyone's tax situation is different. You should discuss your tax situation with a qualified tax advisor before implementing any planning strategy. After you've been in a home for a while, you have likely made some improvements: an addition, a new kitchen, a bath, maybe a new garage. As your home grows and improves, so should your coverage limits. Don't forget to reassess your coverage anytime you make an improvement to your property, and make sure it reflects the increased value of your home. Additionally, over time, things just cost more. The cost to rebuild your home generally rises over time, so having the same coverage 10 years later probably means you're underinsured. By keeping your insurance in line with your home's value, you'll have a peace of mind knowing that you're adequately protected. And there you have it, my forest-dwelling friends. We've covered the key points to consider when purchasing homeowners insurance. Remember, taking the time to understand your coverage needs, your policy types, and regularly assessing your limits can make all the difference. And keep exploring the forest of knowledge by watching this video next. And don't forget to share this one with anyone you know who is purchasing a home.